been associated with over 132 deals.
The 132 is wrong. It's more like 732 because
Amen.
if you put, we did 110 flips in 1 year. Buy, sell, finance some of them we sold for cash. We didn't do any rehabs because they were churning so fast we didn't need to. You know, and here's the key. You want to take one thing away, what Toby told me today.
Since June 15, 1989, Toby has been at the helm of Equality Real Estate Inc., brokering real estate sales and managing office employees and staff. In 1999, a team of investors partnered with him for the purpose of investing in real property, which was ultimately resold to investors and homeowners with private seller financing. Habana Holding Corp. continues to perpetuate this model and is wholly owned by Mr. Biddle. Amen. TAM Properties was formed in 2001 and continues to acquire, renovate, and rent scattered sites throughout Philadelphia. And then Get Development LLC was created in 2005 by Toby and his partners who are established developers. The size and magnitude of Mr. Biddle's projects continues to expand as a result of his affiliation and entities. And he's done it, he put his whole resume, but he's been associated with over 132 deals. 132 deals. ChatGPT calculated it for me.
Okay.
I read through the thing. I was like, tell me the number. So, okay, I read off your bio. Why don't you tell a little bit more about you?
So the 132 is wrong. It's more like 732 because
Amen.
if you put my name in public records and do a search of all the properties.
Oh, you told me what a lot from the sheriff's
and,
sale.
and it's not like they
A
were
lot
big
from the
deals.
sheriff's sale.
So I had the fortunate luxury of being in a real estate family, meaning I started taking real estate classes at Temple when I was getting my business administration degree. So that was really my foundations. I got some education behind me, and I knew that during the process of getting educated that I would take the necessary courses to get my real estate license. So the real estate license was really the bedrock of everything, and that even though I was around real estate and I saw it and I was involved to the extent that I was in the office on a daily basis, I really didn't move forward until I got my education through just the 2 courses, really, in addition to the other courses to get my degree. But I took my test and I got my license. So that gave me the knowledge of some of the terminology and the legality of real estate. And then I started becoming a real estate salesperson, and I sold property, which further got me involved in the business itself, even though I was earning a commission for each sale, and that was my sole source of income. That became a little, rocky, and that commissions are, sometime when it comes to the market and the ability to make enough money to pay your expenses. So I said, hey, I'm in real estate, what else can I do? I started doing property management for other people. So these investors who were buying houses from me, I had my real estate license, I had a brokerage, we opened a management company, and we started managing rentals for other people and charging at that time, it was like 6%. So, $500 worth of rent, which is what the rents were 30 years ago, I was making $30 a pop. And we grew it up to 100 units, and it was a partner and I, and he had a full-time job as an accountant. So we got to a fork in the road, and it was like, we're gonna grow the management company, we're gonna hire a full-time repairman, maybe a bookkeeper, and blow it up, or do we wanna go a different direction? And we went a different direction, we let it wind down, we didn't take on any new clients, they kind of went off to attrition over time. And we started buying our own real estate, which is really key for today's talk. In that, how did I go about getting my first properties that I owned? Because up to this point, I just sold properties and I managed them, but I didn't own anything. So I had a line of credit. I think it was tied to a credit card. Because my father told me one thing. He said, people can come and go, and you can lend them money, and they can take your money. But if you give somebody your credit, it's much harder to recoup your credit than it is your capital. So I always coveted my credit. I managed to have good credit. I wasn't burdened with a lot of debt, thankfully. Again, I came from a family that had some money, so although they didn't give me the money and I don't have a trust fund, I knew the credit was important, and I didn't have a lot of bills over my head, and I maintained that credit. I built up a line of credit. I used it to buy my first house, and then I rented the house out. And then I used my partner in the management company who had a good job, and he went on to become the chief financial officer of PA REIT, which owns all the malls around here, which are not doing well now. But he worked himself up to a $1 million a year salary. But at that time, he was willing to put his house on the line, and his wife co-signed, and we went out and got a line of credit from a bank on top of my credit card. And Eagle National Bank back at the time in Upper Darby was giving us funding to go out and buy real estate. So now we were buying properties, and we would liquidate the properties, and we had a little bit of a niche in that we were reselling the properties as is, but we would finance them. So we would buy the house for $50,000 and we would sell it for $70,000. We didn't do anything. We made 20 grand, but we didn't make it because we only got a $10,000 deposit. So whether it was like a lease purchase to the new buyer, or whether it was a deed and title, which we did that too, we did a lot of it. We had a really a niche in the market that people didn't have a lot of competition. Nobody was coming at us with the same type of product. So we got a lot of borrowers and buyers of our properties that were credit challenged, that felt like they could do the work to the house because they all needed some work. But in my example, we paid $50,000. We only got a $10,000 down payment from the buyer. So we left $40,000. But now we have a $60,000 receivable that people owe to us. And we would give them the loan over a short period of time, 5 years, 10 years, at a high rate of interest, 12%. And that was our model. So we were always starved for cash. And I took, at the end of the day, it turned into maybe $500,000 worth of bank loans, and I had $1 million worth of receivables. But I still couldn't pay for my groceries on Sunday because it wasn't cash. It was, assets on my balance sheet, which looked great. And it started to perform. So I worked my way, and at the time I could sell some of my mortgages. So if I had a mortgage that somebody owed me, in my example, 60 grand, I would sell it for a discount to somebody who would give me cash for that loan. So that was my little hack that got me some capital to keep the ball rolling. And then at some point we ran out of money. The bank with Eagle National Bank, we were at like up to $700,000, and they wanted to give us more money. And I had deals in my pipeline that I had committed to buy. And like my credit, my word was my bond, and I couldn't default. I had to give those sellers my money to buy their house when I told them I would, to perpetuate my good reputation in the business. And my partners fell out. They started fighting. I had another partner on top of the guy who worked for PA Reed. And because they wanted a preferred return, and one guy had all his money in a 401k, the other guy had all his money in a stock account, and they were afraid that if we went bad on our bank loan, the one with all the money in the stock account would lose his money, whereas the guy who had all his money in a 401k was not as liable because they couldn't grab that money. So he's like, hey, I got all my money in my stock account, and they're going to take my stock money if you guys don't pay this bank loan. I want a bigger percentage of the deal. So they started beefing, and I was stuck because now people were looking at me like, you're going to buy my house or not? And I went and found new money. And I wasn't making the decision. I wouldn't weigh in and say who was right, who was wrong. And they came back to me in a month. They said, we worked it out. I said, it's too late. I found new money. And now I don't have to share 66% of the deal because it was me and the two of them and do all the legwork to make the profit. So now it was just me. And all I had to do with my hard money lenders that I went out and found on my own that were going to fund my deals. And then it started to perpetuate from there. But all the while, I still had my real estate brokerage. I still had some little bit of property management. I still had my mortgages that were coming in. And it started to get to a point where it was enough to basically survive and pay your bills at the same time. But it was a tool belt. So
I got a lot of questions. Okay. Couple things.
And during this time, this is when I met Toby when I was looking for a house for myself in 2000. And it was funny because I came in, he had a list of properties. I think I was 21. Maybe I was 21. No, maybe 21 or 18. And I go in, and of course, once I met him, I start bugging him every week for deals and properties. Because he was the only one doing seller financing, and his properties were like 50, 45,000. I'd sell him properties, I'd buy properties from him and his partner. And it was pretty cool, because over the years, we kept in touch.
I got a lot of questions. You said when those two guys were fighting, you got new money. Were you talking about your hard money lenders? Where did you get the new money?
Yeah, so I found there were some private people that I knew that had money that wanted to make 12% return on their investment, and they knew me and trusted me to the point where they would put up the money and get a mortgage on the property to secure their investment. And I've also gone to companies too and borrowed money, through their underwriting process. I
know you're glazing over that part, but I feel like that's the part that people want to know about, right? Like, are y'all trying to raise money?
Yes.
Okay.
Yeah, that's the,
So-
the hardest part of the game is the money. And then even to today, I mean, money is always an issue. Anytime you go to buy something, how am I going to pay for it? I mean, I'm not just stroking a check for every deal that I get. I still have to go through a litany of sources. And when you get old and you've been doing it as long as I have, you become indignant and you don't want to answer all the lenders' questions. But they have a lot of questions even now. A quick story, my stepdaughter, I co-signed for her student loans a long time ago, and they wanted to see, we wanted to reset the loan and refinance it, and they were asking me questions about my personal wealth, and I said an old personal financial statement that said I had, some grandiose, like a $1.5 million of liquid assets. That was what I was using to get financing, like for this building. But that's all I had, and it was old. I gave it to the loan company, and they're like, well, where's the 1.5? I said, well, here's this, and here's that. And it only came up to like 800, and they're like, yeah, that's not enough. I'm like, the loan's 60 grand, what are you talking about? So I just paid it off. But so that's the reason when you go, I still pay 12% interest on money because I don't like to answer a lot of questions, and I know people who've known me for all this time, they'll just bring me the money, and then I can, like I bought a 7-Eleven 2 days ago at a tax sale. I need 400 grand by Tuesday. We cobbled together, two people who wrote checks and they're ready to finance it. We're gonna go close on that deal because we had to struggle to find the money, and there was a 3-day time frame to get the money together. So in that case, I don't even have time to sell stuff that I own to raise the money to do what I need to do. So money is always the key.
All right, I'm sorry, I'm going to lean into that. So I got 2 questions for you. At the end of the day, it sounds like you're a subject matter expert on raising money. Give me 3 things that you know about raising money. Just 3 things. That just boil it down to 3 rules. 3 things like, hey, you want to buy the 7-Eleven, I need to get this money in 4 days. What are the first 3 things that came to your mind?
Well, I mean, just in general, not necessarily my deal. The 3 things are, what do you look like on paper? Like whoever you're going to borrow the money from wants to know, are you trustworthy, or do you have good credit, or is the likelihood of you repaying the debt good based on your prior performance? That's why lenders look at your credit history. They want to extrapolate the data and say, well, if you didn't pay the last 10 people, what makes me think that I'm going to be the next guy in line that's going to get paid? And like I tell tenants who come to rental interviews, when I go to loan applications, nobody ever said, I'm going to beat you and tear your property apart and probably not pay your rent too. It's like, I'm not going to pay the bank loan and I'm going to fight you tooth and nail for the foreclosure. Like that doesn't come up at the application time. So you have to show them that you have some track record and reliability. And so the one key thing is credit. The other thing, does the asset make sense? What are you buying and how much are you paying for it? And is the lender going to be enticed by the amount of equity that's in the deal? Is it a long shot? Like, do 50 things have to go the right way in order for you to get the return that you were counting on? And then as far as the amount of money, the rate of interest that you're going to pay on the money, it's still important. Just because it's money, I hate to hear the interest clock ticking in my head, and I hear it ticking. I had a guy tell me, he used to lend money. It was called an old company called Prime Funding. Jabbar knows Prime Funding.
Yes, very well.
They charge 16% interest and 6 points.
No questions asked, no matter who you are.
Well, they had some questions.
Well, I mean, yeah, but talking about
But I used to have dinner with their lending loan officer, and he would say, Toby, I'm going to give you a $250,000 line of credit at 16 and 6, secured by stuff that you already own, and you can run out and you can buy whatever you want. I'm like, I can't do it. He says, well, why? He says, you're giving away 66% of the deal to those guys. At the time, I had the 2 partners. You're doing all the work. This is 16% and 6 points. It's cheaper than 66% of the deal. I says, you're right if it goes right and it goes fast. If it doesn't, soft cost will eat you alive, interest being one of them, and nothing ever goes as planned. Nothing is ever as cheap as you expect it to be when it comes to this flipping the property, either through closing costs or repair costs if you have to spend money on any of them. And here's the key. If you want to take one thing away, what Toby told me today, you make your money when you buy something. If you buy it at the right price, it'll work out. Resale, rent, your primary residence, whatever it is, if you pay the right price today and don't hope on everything being perfect in the future, you'll be better off. So you make your money when you buy something.
Oh, I was just gonna say, yeah, prime funding also foreclosed on a lot of properties. One of the things when you do go to these lenders, and it's sometimes they say it's predatory lending, you know what you're getting into when someone's saying 6 points, which is 6% basically of the loan, plus closing costs, documents, fees, and all the stuff, and 16% a month. If your contractor bails out, if anything goes wrong, your payments are so crazy that it's hard for you to refi out or get out of it. So now they just take back the property. They had a crazy foreclosure rate, and guess who ended up selling all their properties to other investors? Me. Like, that's why I really know these people, because a lot of times they get somebody's house, they do the deal. They would also do share sale. They were one of the one people that would fund share sale deals, where they would say, okay, cool, you're gonna buy something from a share sale? We'll put up the money, but pay us our 16% and 6. So when you see now someone's charging 3 points and 10, that's cheap compared to back in the day. So, you gotta make it work.
So, okay, let's fast forward in the story just a little bit. Severing ties with those guys, right? Then, okay, move us forward in the story.
Yeah, so then I was kind of quality real estate, which was mentioned in my bio. That's always been my marketing brand, right? So I didn't want to be quality real estate. Let me sell Jabbar's house for Jabbar and Mrs. Jones down the street. Although I did do that and did, make some money from it. My primary focus was quality real estate, was to market my inventory. So now I'm cutting costs. So I have my own inventory, I have my own real estate brokerage. I'm saving half the commission, and I just perpetuated that model on my own that I had started with the partners, and just continued to grow the business at a slower pace. Because in the year 2000, we did 110 flips in 1 year. Buy, sell, finance some of them we sold for cash. We didn't do any rehabs because they were churning so fast we didn't need to. And then I just perpetuated that model, and I only had to do, a third of them. If I did 30 deals a year and I did them by myself, I was still making the same money, because now I don't have the partners behind me. I just have the lender that wasn't charging me 16 and 6, they were charging me 12 and 2. So then I just kept doing that. And then I started dabbling in some rehabs, and then some rentals. And as I've gotten older, because like to a certain extent, when you do a ton of flips, it's like being a used car dealer. So once you sell that particular property, now you gotta go find another one. And again, and again, and again, and again. Sometimes, money's the hard part, and finding the right deal is another hard part. They're both hard parts. So I had to keep churning that. So now that I've gotten older and I've got enough cash flow to keep going, I've been doing more rentals, because I have the machine. I still have the brokers that can manage my own rentals. I have the repair guys who do my rehabs, who will do my repairs, all my rentals, because I give them bigger jobs too, and I get it done hopefully at the right price. And I've just kept pushing them forward, and like it's all tools in the tool belt. It's all real estate related, whether it's sales, management, flipping, rehabbing, new construction, commercial property development. They all just I kept moving in different directions, and the market at different times will push you in different directions, and you have to let it do that. You can't think that the rehab market is always going to be the way to go, or the rental property market is always going to be the way to go, and change gears or have enough diversification across all platforms to keep the money coming and going, and the deals coming and going, to stay active and fall back. Now I can fall back on my rents if I want to take a minute, if the market's not dictating that I should do this or that at the moment. Don't just get tunnel vision and say, well, this is my model, and this is all I'm going to do.
Talk to us about when you were doing all those flips, scaling the business, scaling just the acquisition, the rehab, like what type of team did you have in place? What type of systems did you have in place?
So I'm not the smartest guy in this room or any room in most cases. I'm just tenacious. So I knew what I did, and I did a lot of it. And when it came to flipping, I expanded the model. I went out when the two partners, there was really 3 partners, right? So there was 4 of us. One guy was just in acquisitions, and then the 2 guys who've had a falling out were the money guys, because they had the full-time jobs and had big W-2 incomes that we leveraged to get the line of credit to buy the real estate. My acquisitions guy, he wouldn't leave me alone. He would go through the MLS, through Bright, through calling brokers, contacting. At the time, banks used to sell directly. Now they put everything on the MLS. If they foreclose on something and they have it in inventory and they want to sell it. But he would constantly try to create a list of properties that we were interested in. We did sheriff sales, we did estate sales, we advertised in the paper, cash for homes. We did a big yellow page ad back in the day, which is now our online presence, to get leads. And he would compile all these leads and he would come into my office, and I remember it vividly, and he'd say, come on, Toby. I'm like, Arthur, I got all the paperwork, I'm writing checks, I got payroll, I got this, I got that, I'm fixing this. He says, get in the car. I said, I can't, Arthur. He says, he literally pushed me out the door, get in the car. We'd go look at 20 houses, we'd make 20 crazy offers. They're asking 80, we offered 50. You know, on and on and on. And we would type up the agreement, we would put the check, we would proof of funds, send it out the door. We would buy 2 or 3 houses every time. It's a numbers game. The more stuff you throw against the wall, the more you're gonna buy. Back to my original statement, at the right price.
What areas at that time were you concentrating on? Like, did you care? Like, at that time, Drew just bought everywhere, but where did you think that it was like the best opportunities? And do you see any like areas now that you're concentrating on?
I stole to Drew, but to answer your question, we did citywide. You know, the city was my area, like anywhere and everywhere. I have a great general knowledge of the entire city. You could tell me a street, I could tell you. The city is like if you look at it like a coordinate, right? So we're at 1500 North 5th, so we're 15 blocks north of Market Street, 5 blocks west of Front Street. That's the coordinate. So I could take you to anywhere in the city. Now, super hot areas, Graduate Hospital back in the day, the far northeast. I don't know from them because there wasn't a lot of stuff there. And if the demographic is such that the neighbors can afford to buy the house next door that goes to foreclosure, then I'm not getting in that fist fight or beauty contest to make my offer the prettiest to buy that house. I'm a bottom feeder. I want the right price. Back to my original statement. Give me the right price, and I'll make that low offer, and you can scoff at it and laugh at it, but my check clears. And I'm not a flipper. And I used to go to the sellers and I'd say, Mrs. Jones, you know, your house to me right now is worth 50 grand. If we fix it, it's worth 100. And if we put on the market, you could sell it for 70. What do you want to do? Because I'm not fixing it, but I'll put it on the market for you. And if it doesn't sell, I'll still give you my 50 grand if you want it. But then the next guy would wander in who was just a flipper, and he would offer her 55 and then send the agreement out to 1 million people to try to get his 5 or 10 grand on top. And if he couldn't, he would ghost her. And she has all her stuff packed in a box to go to wherever, North Carolina. And I didn't have the intestinal, or ghost and just disappear. Or I wouldn't have the intestinal fortitude to tell that little old lady that, hey, sorry, ma'am, you know, I'm not buying your house, or I can't pay you 50, I can only pay you 40. You want it now or not? That all your stuff's in a box and the moving van's outside. But I used to get so mad. I'd be the first guy in, I'd make the appointment, I'd show up, I'd have the money. I'm a check writer, lady. I will give you this money, but for 5 grand and a promise, I would lose every time. But I would just do it volume.
We were just talking about making sure you're looking for deals, always looking for deals. We're just talking about that. Okay, so continue the journey all the way up until now.
So I just kept perpetuating the model at a slower pace with less partners, and then along the way, I was still doing mortgages, selling mortgages. But then when the market got really hot, 2005, 2006, everybody and anybody can get a loan. They didn't need my owner financing. So I was just doing fix and flips, and I was